Hey everyone, welcome back. Today we are looking at Polestar Automotive, the stock, to be honest. Now, for one of the few times, or one of the first time, I've seen the Polestar share dip below $3 per share. And immediately, I bought around 5 shares. Yeah, I bought around 5 shares. I could have bought more, but I'm doing strategic investing right now, which means that I don't really ever want to sell those Polestar shares. So what I'm buying right now is shares that I don't ever want to sell. And that's why I'm not really buying a lot of Polestar share, but I really want to buy more. But unfortunately in the UK, I cannot get Polestar shares on my ISA account. That's a tax-free investment account. And I just can't get Polestar share. It's a long story. But honestly, today we want to focus on other stuff regarding to do with Polestar. Now, keep in mind, this is not financial advice. None of this is financial advice, and I'm not a financial advisor. This is all for educational purposes and entertainment. Now, Polestar Automotive slashes at Barclays as demands weaken. This is interesting. But is demands really weakened for Polestar? I don't think demands have weakened for this company, in my opinion. But I'm willing to look at the evidence if they have evidence to propose. Polestar Automotive shares dropped by more than 8%. I believe this was on Friday after Barclays downgraded the company to underwrite from equal rate and cut its price target to $3 instead of $5 on a demand and capital concern. This is interesting. Let's look at the evidence that's available. And I hope there is evidence available because I need to know more. And the big question is, what we want to be thinking about today is, well, does Polestar have a demand problem? Or does Polestar have a cash problem, a capital problem? Do they have enough cash? And they just received what was it, 1.2 billion investment from Geely and from Volvo, like less than a year ago. And that was to help them continue the development of the current Polestar vehicles that they're working on, but also bring a few more models to the market, such as Polestar 4, Polestar 3. They want to bring the Polestar 3 to the US market really badly. It's been delayed a little bit. And that delay has definitely affected Polestar. This is one company that is really undervalued. And unfortunately, you can't afford for a delay. If Tesla delayed a vehicle, the share price will probably drop a little bit. But Tesla relies on so many other things going on in their business. The share price will probably recover quite quickly, quite briskly. But with Polestar, it's vastly different. Now, I believe we have a spokesperson from Barclays who said, and I quote, "The largest incremental development since our launch of coverage has been a deterioration of EV demand." Wow, a deterioration. So, for Polestar, EV demand apparently have been falling. The firm acknowledged Polestar reliance on contract manufacturing as a strategic move to sidestep direct price competition from eliminating overhead cost worries. However, the uncertain demand landscape raises concern about the company's eventual production levels. Fascinating. That's interesting. So, excess property trust cut at Citi. However, this article, it doesn't really provide much more information other than what we just spoke about, to be honest. There's other information on other companies, but there seems to be no other information on Polestar. What is this demand problem? And is this demand problem just a general EV demand problem? Is it affecting Tesla? Is it affecting NIO? Is it affecting Lucid? Is it affecting Rivian? Is it affecting other EV companies? Or is this specifically for Polestar? And where's the evidence? Now, before we find that evidence, let's just take a look at the stock price at the moment. So it's $2.84. And to be honest, this is roughly around the same price of which I bought quite recently. So let's look back in the last week for Polestar. In the last week, this is not the first time the share price. So this is what the market has looked like for Polestar in the last week. Honestly, in last week, 31st of August, it was $3.54. So in the last week, it has lost 16.96%, almost 17% in 1 week. In the last month, it's lost 30%. In the last 6 months, it's lost roughly 28.82%. And the year to date is the one that's getting everyone worried about Polestar. It's lost 48.55%. That is a lot, to be honest. So it would appear this is really and truly the first time in history where I've seen the Polestar share dip below $3 per share. And $3, by the way, so in Great British pounds, it's quite a bit less. It's like $2, $32.40 per share. Now, in one full year, it's lost 58.24%. Now, since going on the public market, since its IPO, it's lost over 71.6%. So a huge amount of the valuation in this company has simply been wiped out. So the investors, the initial investors perhaps, they're selling. They're selling out. Surprisingly, the market capitalization still holds steady. Still holds strong, I should say, around 5.94 billion. But I can't imagine walking into this company every day and seeing the share price this low, knowing deep down that this company has a huge amount of untapped potential. I always seem to remind everyone, this company is only delivering one vehicle. They just put the Polestar 4 on sale in China. They've had to delay their Polestar 3 because of the difficulties that Volvo has found with the platform of the EX90. The EX90 and the Polestar 3 sharing the same platform. They need to get this right, and that's why they've delayed it, to give themselves more time to get this technology absolutely correct, because second chances don't come around often. So by next year, we're looking at the Polestar 3 and the Polestar 4 joining the market along with the Polestar 2. I think next year we can see a big difference in the share price of Polestar. I think next year, once we start getting new cars on the road, not to mention we need these cars in Europe, in European market and in the USA market, that's going to make a big difference to the share price. People will start to appreciate this company more. It's not just one vehicle anymore. We've only got one vehicle. So the share price, keep in mind and consider that literally we're not doing particularly well right now in share price. But also, we've only got one vehicle. Imagine when we have two more. Imagine when we bring the Polestar 5 to the market and the Polestar 6. That will be around 2026, 2027. But for now, the Polestar 2, the Polestar 3, the Polestar 4 will start joining the market in full swing by the end of next year. So this year, we're looking at 60 to 70,000 in deliveries. Next year, we're looking at 100,000 vehicles being delivered. Rivian is quickly catching up. Rivian is looking to deliver 50 to 60,000 vehicles this year. Next year, Rivian is probably looking to double that number once again. So if we're not careful, Rivian could overtake Polestar. Not to mention, Rivian, they deliver less vehicles than us, but keep in mind, majority of their vehicles, if all, are delivered in the USA. Maybe some in Canada as well. So the market appreciates that company way more. Also, a lot more people know about Rivian. A lot more people appreciate Rivian. They're building trucks. It's the number one thing that Americans love, trucks. So the appreciation for that company is quite a bit different, despite the fact that we're more valuable based on the numbers we're delivering. But Rivian is seen as the next Apple. They're seen as the next Tesla. So people do appreciate them a lot more and people do invest in them a lot more. People tend to see Polestar as a bit more risky because they're thinking it's Chinese manufactured EV. It's basically a Chinese company. But that's not necessarily true. It's a Swedish company. It's registered in the UK. It's on the stock market in the US. They manufacture vehicles in China. It can be a little bit confusing, but nevertheless, it is a Swedish company, just like Volvo. However, they are owned majorly by a Chinese EV company or a Chinese company, which is Geely. And Geely is planning to be the next Volkswagen. And I think it's definitely possible. Polestar is coming out with new vehicles, but also Lotus is coming out with new vehicles. And I believe Lotus is probably going to do an IPO as well. Lotus new EVs are looking absolutely incredible. These vehicles are looking great. These are not just concept. These will be real vehicles being manufactured into production next year. And this company is owned 51% by Geely. So Geely owns a lot of companies, Volvo, Polestar, and Lotus. So they're in a great position to capitalize on a great market. So do not underestimate these companies simply because they're owned by a Chinese company or simply because the cars are being built by a Chinese factory. The last time I checked, my iPhone is built in a Chinese factory. Most of our technology are built in China. But I think there's always been the stereotype, a stigma that the Chinese market doesn't manufacture good cars. But hopefully we can change that because all Polestar vehicles are manufactured in China. And Polestar makes great vehicles. So we need to change that because clearly it's not completely true. Clearly, great vehicles can be built in China. Look at NIO. I've been in a Neo vehicle. I've been in a Neo vehicle and I've never liked a vehicle interior like I've liked the Neo vehicle. It was so nice and premium. For a vehicle that's going to be on the market for around 35, 40,000 pounds, it was so nice and premium. I'm still surprised till this day. I like the interior more than I like the Polestar interior. That tells a lot. If I were to compare the Polestar 2 interior to the Neo ET5 interior, I'm taking the Neo ET5. And I never expected that of me, but when I went into the vehicle, I was amazed. I loved the touch, the material. It was premium, it was great. And I've been in a Polestar 2. I've driven 3 different Polestar 2s. I still love Polestar, but I'll admit, I like the Neo interior more. So I'm not underestimating Chinese EVs. I'm not, and I won't. And I think it's time that we stop underestimating Chinese EVs. You can see that the Chinese market, they're moving away from just pure out manufacturing and they're moving into a different side of business. And this is good for their economy because they're changing the way their economy works and functions. And this is why they've also been talking about introducing a huge iPhone ban within their country. And I kind of understand. They want to prioritize their own companies within their own country. That makes a lot of sense. Now, like I said, in terms of evidence, I can't find any evidence to support that Polestar has fallen demands. Perhaps the EV market in general has fallen demands, but not just Polestar. I remember Lucid is struggling, and Lucid makes great cars, luxurious, but they're extremely expensive. So it's not all about just making great cars. The market is far more difficult, and Lucid vehicles are made in the US, and they're not selling very well. So it's a complex issue. It's not an easy issue. But I'll look for more information on this subject. Thank you for watching, and I'll see you in the next video.